Now, while many Canadians will welcome this rate drop, it does indicate some weakness in the Canadian economy. And to talk about this, we're now joined by Pedro Antunes, Chief Economist with the Conference Board of Canada. Pedro, thanks for coming by.
It's a pleasure, always a pleasure.
So, when we talk about a cut in the interest rate, in part it means that the Bank of Canada wants to jumpstart the economy. So where are we as a Canadian economy experiencing weakness right now?
Well, I mean, definitely there's lots of bad news out there. Statistics Canada just told us that the second quarter came in very strongly negative. In fact, at an annual pace of minus 1.6%. So we're declining in the second quarter. It's true that we saw a big surge in exports ahead of the tariffs in the first, so a little bit coming off of that. But it doesn't really look like it's a very good news story for the rest of the year. The third quarter looks like it's going to be flat at best. So there's bad news on just the, essentially the economic activity front. There's also, of course, bad news on the labor front. We've seen in the last month, in August, 66,000 job losses. I think Governor Macklem made reference to these things. What does that mean? Well, it means less wage pressure. So I think there's room here, both in terms of less pressure on inflation and the fact that, essentially the economy is not showing signs of strength at all.
Okay, not showing signs of strength. Does that mean then, to look at it at another lens, that the Trump trade war, the policies that he's been pursuing since the beginning of the year is now coming home to roost?
Oh, definitely. There's no doubt. I mean, certainly we've seen it on the key sectors that have been hit by tariffs, the auto sector, steel and aluminum, forestry products. These sectors are already showing signs of weakness, and we've seen job losses in manufacturing and others. I think the bigger issue, though, is, well, actually, there's two other issues. One is the hit to confidence. The uncertainty around access to the U.S. market is really killing business investment, or business confidence and business investment. We're seeing confidence essentially at recession levels. And it's the same on households. They're worried about their financial situation. They're worried about future job prospects. So these things are affecting. So we've got the exports being hit, and now we're seeing the impacts on investment and consumer spending. And lastly, the tariff war that the U.S. government is waging is a tariff war against the rest of the world, and it's hurting the U.S. So when the U.S. economy doesn't do well, of course, it broadens the impact on the rest of our exports. So it's not a good news story, I'm afraid, all around.
Yeah, so as you say, weakened demand here at home, weakened demand for Canadian exports because our number one trade partner still is the United States. I don't know if you agree with this, but it seemed up until this point, what we were talking about was an uneven impact of these tariffs, because certainly when auto sector, steel, aluminum, they were getting hit hard, but it now seems that that pain is getting more broadly based. Is that a fair analysis?
I think that's very fair. And, when you look at effective tariffs, Prime Minister Carney was saying that we have the lowest tariff rate in the world, and he's talking about the effective tariff rate, and that's true because much of our products now going to the States are still under CUSMA, and they're able to get through the border tariff-free. But those key sectors did get hit. Now we're seeing the broader impacts, as I mentioned, on the investment intentions and the investment decline that we saw in the second quarter. That's very bad news. I can't stress enough, our investment, this is private investment that drives essentially future production, future job creation, our productivity. We're at very low levels in comparison to other countries, even before this tariff war, and now we're seeing, yes, certainly not good news, and continued declines in machinery and equipment investment in particular. So, yeah, again, it's all coming home to hit us now with the tariff war going on.
So I got 2 minutes left, but I do have two questions to ask you, so I'm going to ask for quick answers on this one. Because first, the national projects that the Carney government is identifying, the government will tell you this is meant to be catalytic in that the money invested is meant to then spur on to other investments. When you talk about weakened investment confidence, are these national projects worthwhile right now?
Yeah, I think so. I mean, we're in a really tough situation. I think we can always look to the past and say we could have done things differently, and we should have perhaps done things differently. But going forward, the economy is now weak. We're at pretty much a recession, if not an official one. We're very close to one. And, you know, this is the time that governments should open their purse strings up. And if we're opening them up in the right areas, things that are going to drive our future production, then I think that's a worthwhile commitment. We also have our NATO commitments, et cetera. So there's a lot of challenges here that we need to deal with. Unfortunately, it comes with a cost, and that's possibly bigger deficits and the debt financing costs, which we need to keep an eye on.
Mm-hmm. Keep an eye on that. Listen, and one last question, because again, this is not over. What are the things that Canadians need to be wary about in the coming months?
Well, you know, I think. Personally, I think the pressures on consumers are not done yet. What's kind of held the economy thus far has been consumer spending. Despite the low confidence, we've been drawing down on our savings. I think going forward, we can't necessarily look at that as an option because a lot of households are still renewing mortgages from back in 2020 and 2021, and so those pressures will still be there. I think what we need to think about, both in terms of monetary and fiscal policy. I think we're going to hear about fiscal policy being expansive. I think we may see monetary policy, in other words, rates continue to come down and perhaps ease that burden. We need, I think, we need to fight this with both policy tools that we have here.
Okay, Pedro, thank you for this. I always appreciate the time.
You're welcome. It's a pleasure.